Yo, so I'm just gonna do a quick back testing video basically on today's price action, and we'll basically start from the beginning, going all the way towards the end of the day, and seeing what trades you could have done, um, so on and so forth, basically. So, what I like doing first is marking out 7 o'clock to 7:30. Then we have 9 o'clock to 9:30, and then 10 o'clock. Right. Those are the zones I mark out. And then, okay, we'll just play it for a little bit. Market ends. Right. Market ends here. First thing you want to look at is possible areas where market could go to, right? Possible areas market could go to, like liquidity or imbalances. So to look at liquidity or imbalances, you would go on a higher time frame. 1 hour is what I usually use. It's the max that I use. And then basically just mark out your highs and lows. So we have this wick that I'll mark out. Mark this as buy side. Then we have this relative equal highs as buy side. And so on and so forth. Like you could go on and on with all these marking out. You don't need to mark out all of them, but know that price will probably draw towards them, right? I'm just gonna mark this relative equal highs, right? Then we'll just do this one, and I believe that's all-time highs right there. This is all-time highs. Okay. Those are our higher time frame buy side liquidity. You could even mark out this one too if you wanted to. Just anywhere where a market makes a new high, you could consider that a liquidity zone or a draw on liquidity, as that's where market will probably re-reference. Okay, now we look at our sell side. Let's see what we have. So we have this relative equal lows right here. We have a closer equal low right here on the hourly. Okay, now looking further back, we have these equal lows. And we have this huge wick, so I'm just gonna mark the end of this wick as sell side. Then these equal lows, and these relative equal lows right here. And like I said, you could go on and on, go back in time, but you don't need to go that far. You only go that far if it starts heading this direction and you see that there could be a lower draw, then you would go back. Okay, now that we have our buy side and sell sides, we're gonna look for our imbalance. Now, for imbalances, I look at the 1 minute time frame. But basically, imbalances are gaps. On the higher time frame, you could consider this a whole imbalance, right? But it wicked into it, so I'm just gonna consider the top of this wick right here to this wick an imbalance, right? Then we have this whole candle right here is imbalanced, right? You could do that whole candle, or we could go in to the 1 minute, go take a look at it, and then just go take a look at the gap it created. I believe there should be a gap here. Yeah. right here. So this gap, you would mark out this gap as a imbalance. So we'll just do that real quick. That should be good enough. You get what I mean. So this is imbalance. This 1 hour fair value gap is an imbalance. And then another imbalance. So from previous day, if you look at previous day, you could consider this range down here from London low to wherever market closes. So like down here, you would consider it imbalanced. Here you would consider imbalanced. For now, let's just consider London low to wherever this wick is an imbalance. Right? And then we could do a closer imbalance, which would be this one to this low. Right? So those are your imbalances and draws on liquidity, buy side and sell side. Okay. Now that we have that taken care of, let's go ahead and play market open. Market open. What does it do? It goes up, right? It wicks it. It wanted to take out this lower time frame liquidity, but didn't. So here's what I seen. Before market even opened, I seen that we have these imbalances down here, right? So I'm guessing market is gonna go down to fill some of this imbalance before it goes up. Now, we already took a lot of buy side this day, right? So we took out this buy side, and then this buy side liquidity, right? So I'm guessing market is gonna, this was a manipulation and we're gonna go down a little bit. A little bit, you know? It doesn't have to go down all the way to fill these imbalances, but it'll go towards it. Like this is our draw for now. Okay, so let's play it out. Let's see what happens. It goes towards it. And then it goes away, right? Now, at 7 o'clock, it starts going down again. Right? 7 to 7:30. That's the zone I marked out. And what I've noticed is that in between this time, like 7 to 7:30, there's some type of manipulation. So if we go back, I'm not sure if it'll show, but there will be some type of manipulation. So go back in time, 7 to 7:30. All right, we start going up. That looks like our manipulation, right? Because we have this whole range that is imbalanced. So I want market to go down towards it, right? So this would be our manipulation. Okay, now going back here, there's not really any manipulation here other than it just going towards here. And then if you look at our imbalance zone, right, it's in the top quarter of our imbalance. That work? Okay, yeah, it's in our top quarter of our imbalance, and I consider that it touching it. So we cleared this imbalance for now. So you could assume that market could go lower, or that it grabbed imbalance to go higher. And what does it do? Also, when market opens, I usually draw a fib here from the first candle to the wick, or the body to the wick, if it's an up candle or a buy side candle. Let me change it to Ivan's fib. This is just to give me some ranges that it might go to, right? And then same thing with our sell side. Those are some of our ranges. Sometimes these hit, sometimes they don't. I gotta figure out the exact like science behind it. But for now, that's how I do those. And then okay, let's play market. Let's see what it does. Okay. It's in this top quarter and it's respecting this imbalance, or it's gathering, accumulating in this imbalance, right? Okay, let's see what happens. Oh yeah, also make sure that you know that anytime a market opens, sometimes there's a huge manipulation. So I know somebody was in like sells, I forgot from where, but I think it was like from here. They were in sells for some reason, right? And they had no stop loss, and they weren't factoring in time, and market opened and literally basically liquidated them. Now, when market opens and makes these big moves, you could also draw fibs onto it, right? Now, especially this one, how it takes out this higher high and it takes out these lower lows. You can mark this out with the fib, right? Candle body to candle body, right? Now we have our entry zone, our OTE, optimal entry zone, right here. Now in this case, it keeps on tapping it, but we're also barely at market open. So you want to give it some room, right? Be patient with it. So we're just gonna change this to this OTE. All right. So here's our OTE, optimal entry zone. And let's play. Let it play. Let it play. Let it play. It taps. Here is probably where I would get into buys, right? I would long this. You could have longed here too as well, but because market did barely open, you want to give it some breathing room. So this is where you would have your first entry of the day, right? And then go for 4RR, right? That's our first. Let's see if it hits. Play. Take some time. Take some time. This Asia session was kind of like choppy and accumulating. So we'll see what happens. Boom. Okay. Take profit hit. 1 to 4 RR. Perfect. Perfect. I'm gonna mark this out with my little 1 to 4. Here we go. So at 20 or at 50 points right here, you want to be break even. At 75 right here, depending on candle closure, right? Depending on candle closure, you want to move your stop loss to 25%. But here it hit full take profit. Okay. Now let's continue. What zone are we in? We're in. Oh wait, I had these wrong. Not 9 p.m. We need 9 a.m. 9 a.m. Okay. What? Am I tripping? I guess it doesn't pop up on here? Am I on the wrong one? Okay. We'll just continue. Right. So here's what market does. Here, I don't see any other trades you could be taking. Right? It's just too choppy. Doesn't make any sense for any trades. Also, it hits one of our zones on the fib right here, and it rejects instantly off of it. It's just something to keep in mind. Play. It taps for OTE. Let's see what happens again. Does it respect it? It doesn't. So you would get stopped out. This is not a trade you could have held all night. But it also took out this liquidity right here. Whoops. this sell side right here. And let's play it. Oh yeah, anytime it takes sell side with a big move, you could consider this some type of market grabbing liquidity to run to where it wants to go, especially if it doesn't fully just run through it without any resistance. Like this has some resistance, right? It takes it, but then just rejects off of it. You could get an entry off here. Fib. You could get an entry off here. Boom. Here's your entry. Let me get rid of this old entry. And let's see if this long hits, right? 50 points. And 4 RR. 200 ticks. Alright, let's see if this hits. Let's play. Boom. Full take profit hits. Now, you also gotta be careful because midnight is also, I forgot to mark this out for you guys. Midnight open, true day open, is also highly manipulative, right? So you could also consider this your manipulation, especially since it took liquidity, it didn't just left it. This is manipulation right here. All right, and there you go. This is your second trade with 4RR. Now, here's the thing. London likes to run sometimes. So you could take this all the way to a buy side liquidity or to imbalance. So let's see what happens. Click play. It rejects off our 2.5. And then opens right here. What does market do at open? It either manipulates or continues. Here there's no manipulation. Let's see what happens. It's accumulating. So let's take a look at why it's accumulating, right? We have, it didn't take any liquidity, it looks like. So it could just be a higher time frame fair value gap. Just accumulating. Eventually, we get our full take profit right there, right? For how much RR? 1 to 11. Okay. Now you can have a runner if you want and look for this buy side to be taken. Let's see if this gets taken if we had a runner. This is all based on if your bias is right, okay? Let's play this. We fully filled this imbalance, so I'm just gonna get rid of it. We're accumulating at this -4 zone. We're accumulating at this 3.25 and -3 zone as well. And then we have market open at 9. Okay, here's the actual zones you want to mark out right here. 9 o'clock, 9:30, and then 10 o'clock. Alright, let's play it. Here we go. We might just hit -4. So based on time and how close we are getting to 9 o'clock, you want to start getting out of your trade, right? Or start dragging your stop profit. Look, we had a huge dump. This was pre-market. So this is a manipulation, right? Let's see what else happens. It also bounced off of our 3.5. So you could have hit hit full take profit here instead of at this buy side, right? This is just overachieving. This is your runner, right? So you could have just took your full take profit. If you're still holding, let's see what happens. We still have not opened yet. Market opens. Huge wick up, okay? By now, you should be out of your trade. You should be out of your trade and looking for something else, right? This is your full trade. Don't be too greedy. Okay. We look at market open. We can mark our next possible entry zone, right? So we have this range, this high to this low. We have OTE right here. OTE. Change the color of this. And let's rename it OTE. So at this point, you should be looking for shorts. Right? Now, here's why. Here's my reasoning, right? And I could pre-mark this out if I wanted to. Every time, or most of the time, New York will take out London highs and Asia highs and lows. And it'll start going towards true day open. Most of the time, right? So, factoring that in, here's the trade you could take, right? Now, give it some room because it's 9 o'clock to 9:30 open. So let's play this out. And then as soon as you see a good entry, so you could tell this right here is our manipulation. Right? If you couldn't tell, this is our manipulation. What did we do with this wick? We went back up and respected this high, right? We didn't take out any liquidity. This is our manipulation. Then let's continue. Play. Keep on playing. Right here, when you see this candle, these candles respecting your OTE range, you could probably get into a trade here, right? It's all about your timing, right? If you went into this trade and had a limit buy and had your market or your SL at just 50 like usual, you're gonna get stopped out. Why? Because this is market open, or 9 o'clock. 9 o'clock to 9:30 is kind of iffy spot to get into a trade, right? So you could have a bigger stop loss. As soon as you see this wick, you can have your stop loss above that wick if you wanted to, right? Okay. Say you didn't get in trade here, and you're waiting for 9:30 open, right? Let's see what 9:30 does. Okay. Huge wick. Okay. Let's see if there's any entries we could have taken here. With the fib at least. Okay. We have a break above this. Then we have this low being broken as well. Okay. This would be our OTE from this wick to I think this candle body, the body close. And you could probably get into a trade here. Let's see what happens. I'm not sure if this is the right way to draw this one, but right. You could have gotten to a trade here if you wanted to with OTE. But let's play it. What does market do? Let's look at our London low, which is this one, and let's look at our Asian low. Let's see if those get taken out. Okay, let's play this. Oh yeah, some people said that there was no manipulation at market open. That's because the manipulation was at pre-market. Play. What happens? Starts dropping. Take profit already hit. That's 1 to 12 RR. You could have held a runner. And since we broke and we accumulated here, you could, because I don't really trade after New York. You could have held a runner down to the hour lows or down to see if this -4 gets hit. See if this gets hit. I believe this one does. Let's play it. And we're accumulating at that 325 and 3.5. Continue. Play. Let's see if this -4 gets hit. Oh. And we get full take profit at -4. Boom. See what else it does? It's accumulating. Based on time here, we have our lower liquidity here, but we don't need to run any lower, I don't think. So, guessing we're just going to go back up, right? We're going to want to rebalance all of this imbalance. Okay. What does market do? Let me go ahead and move this over. Boom. Market. Let's see what it does. It took these relative lows. Let's see what else it does. It's accumulating. It took these lows. Okay. And that's it. That's all it did. Whenever you see market ranging like this, you don't even want to be in a trade here. Right? There's nothing you could trade here. See all these wicks? There's no point in trading this. Right? The only trade you could have taken was from here and try to cash this long, but that's based on if you even get a good entry or good fill. But look at the time, right? 4 o'clock. This is our power hour, I believe. This is just our power hour. Nothing. There's no trades here. So here's my question. Why would you want to trade this? Right? Makes no sense. I mean, sure, if you see a good entry, go ahead, trade it. Be my guest. But most of the time, you will probably get stopped out. But yeah, those were the possible entries you could have taken. And our draws on liquidity and bias, right? Also, if you look here, we filled both of these imbalances. New York. We also took Asia low and London low with New York. You look back, it doesn't always happen, but for the most part, if we don't need to go any lower, New York will take Asia lows and London lows, right? New York took both of these, but New York also was ranging here, so this was a low probability day, technically, right? Let's go look at previous. Let's see. Asia, London, New York. Takes all 4 of them out. Boom. One fell swoop. But like I said, it doesn't always happen. It's like, I give it a 70% chance that New York takes out those zones. Now here it doesn't, because it creates this imbalance up here. You would think market wants to go up there, but this is it creating more liquidity, right? It's going down, taking out all this sell side, all this sell side, all this sell side, even more sell side, because eventually it's gonna go up there, probably with news as it pushes up, right? Okay. So eventually this imbalance will be filled. But yeah, here, like I said, here's our imbalance. What does market do? It draws towards it. It breaks liquidity, liquidity, liquidity. Here, we have a balance up here. It draws towards it. It draws towards it. Fills the bottom quarter. And then drops. Let's see what else. We have this market open imbalance. So market will draw towards it. Not all the time this happens though. Just make sure that you just keep in mind that these are like a type of liquidity that you could like have your draw for, right? Up here is already balanced, so we can't go any higher. We're gonna go lower. That's what it did, right? Once we took out some type of liquidity here, I believe, with this wick, then we start going back up. So that's bias, draws on liquidity, and how to use the fib. Right? Every time market opens, I draw the fib. Alright. Candle wick to candle wick. And then for this one, it would be candle wick to the low. I believe. Yeah, gives us somewhat of our range. Yeah, that gives us our range. Let's see, market open. We have this to here, and we have a small one here. That probably doesn't give us our full range. Yeah, it doesn't give us our full range. But I gotta tinker with this more, and we'll see. I'll give you a more concrete example of how to draw the fib. Okay. But when it is right, it shows you good levels. Boom. Boom. War zone here. But anytime you see market manipulate, right? Let's see. We have midnight open. Consider this our manipulation. Anytime you see manipulation, 9:30 open. Okay. Look at this. Consider this all our manipulation right here. Actually, this would be our manipulation. Boom to boom. This would be your OTE. To this wick. Boom. This would be your entry zone. And then it gives you your levels. Wicks at 2.5. And then in this zone right here, market tends to struggle. That's what it did. That was our low of day. But yeah, I could go on and on about market marking out these fibs, but it's easier if you look at Ivan's video because he explains it much more simple than I do it because I'm still learning. But yeah. Market open. We start ranging. We took out both liquidity zones. Like I said, this is an order block, so it can't go any lower. Makes sense. So it will bounce back up, and so on and so forth. But yeah. Same thing right here. This is our manipulation. OTE. Entry zone. Right here. This wick. Right there. We don't get fully filled at our limit. So just make sure you're looking at market. Yeah. Yeah. So hopefully you guys learned something. Have any more questions, just message me and I'll try to answer it. But yeah, that's it.